Hello and welcome to this week's episode of Build Value by Choice. I am your host, Nana Bonsu. I am the President and CEO of Infinite Horizons Incorporated. Our website is www.inf.com. And what we focus on is on helping business owners create a sellable business that gives them more options, whether they want to transfer their business to their children or whether they want to sell outright or whether they want to go public. We utilize a system to help business owners work side by side with them, to put them on the same equal footing as acquirers, or may even make their business more fun to run. This week's episode of Build Value by Choice podcast show is going to be focused on the mergers and acquisitions market, and I have a professional who's joined me on the show. His name is Krystof, and Krystof is based out in Europe. And he specializes in acquiring business service companies and marketing companies. And I have him on this week to talk about his perspective from the other side of acquiring businesses and what he sees as far as deals and what are some of the mistakes or some of the challenges that business owners come to the table with. Welcome to the show, Krystof.
Yeah, thanks for having me. It's exciting. Let's go.
Wonderful. Krystof, so if you don't mind giving us a little bit of background of you, how you got started in doing what you do, and what got you so passionate about this particular venture of acquisitions.
Yeah, sure. So after my high school, I started in the sales job. And it was in the financial industry. So pretty quickly, I got introduced to stocks and other different assets, and I started in that. Then I transitioned, to make like a long story pretty short. I also run a real estate investment fund, and after a couple of years, I was like involved in the real estate and financial markets. I got like really good at that. And then I sold all the real estate holdings that I had. So I need to start to manage my money much more. And being in the stock market and give me a perspective of analyzing companies and really understand the financial stuff. And then at the end, I was like, what other assets that I can invest in and can get an education and learn it. And it was companies. So I decided I will start to look at small and medium-sized businesses. So I don't need just to like find the good companies on the stock markets and hope that stock will go up, but I can do something with that, right? Mm-hmm. And because I was great in the financial stuff and CFO stuff and things like that, I was able to help companies to optimize cash flow, profits, and things like that, and make them more valuable. So I decided, okay, let's do that. And before that, I was starting a couple of companies and closed a couple of them because it wasn't successful. And I learned pretty quickly that I'm much better in terms of like optimizing and maximizing things that already exist than creating the new stuff, right? So a lot of people are talking about how to start startups or new companies. And I just learned if I can take something that's already exists, has a proof of concept, as a customers, employees and everything, but needs to go to the next level, that's when my skill set is at the highest and best use. And then it went full circle. I bought a financial investment company and advisory company. Now we also own a development company. So I got back by doing those deals to the real estate and financial markets and having the company that sells insurance and mortgages and things like that. So yeah, that's basically it. And after a couple of years of sitting and just watching my computer and watching the charts on the stock market, I was so happy to go back and start to talking with people again. So that was great again, and everything was like put together in terms of being in the sales process, because like buying businesses and investing in businesses, it's still the sales process, because you need to find those type of deals, right?
Mhm.
and do great deals with the business owners. So it's win-win for everybody, and it works to get their outcomes faster and your outcomes faster as well. So I guess that's like quick overview. And you mentioned that I'm in Europe. That's right, but I'm mostly focused on the deals in the US actually.
Oh,
So
okay. And typically, how do you see the different? I mean, I imagine there's a reason why you focus more on the U.S. market than the European market. Could you elaborate a little bit more? Just.
yeah, sure. So I believe, like, just I'm from originally from a small country of like 10 million people. So for me, US was always about like bigger scale and bigger economy. And I believe, and it's true with businesses, right? And we will probably discuss that bigger is better. So if you have bigger business, it's more valuable, right? So that was my thinking behind just wanting to do business in the US, which I do for the last 10 years. And but in the US, you have more options in terms of financing and things like that. I cannot speak about all Europe, but because UK is, for example, much different than Czech Republic, where I am from. But if I compare my home country with the US, definitely there's more options for financing in terms of buying and either than like a selling, because it's more, I guess, more sophisticated economy in terms of capitalism and doing things like that. Just having the SBA type of loans is something that we don't have. It would be exciting to have. So I would say that's biggest difference. And if I, for example, we help also companies take public, and if we are talking with the companies in the UK, for example, they are much more likely to do these kind of deals, because, for example, in US you can sell very comfortably and for great terms your business to your employees using things like ESOPs and things like that. So I would say like more options to solve more things in terms of financing and finding investors and things like that, which is great, but everybody has the same advantage, right? So sometimes disadvantages could be disadvantages. So sometimes I take something that works in the US and apply in my country, and it's like something completely new. So that's kind of exciting. But yeah, I would say that's the biggest difference. But for example, in my country, the companies are, for example, valued higher because
Mhm.
we don't have that much. In the US, you have like this baby boomer wave that will be selling a lot of businesses right now, but I guess there's another decade that still will be true, that people will want to transfer, and that put pressure on the prices in terms of like not being that valuable, especially if you have small and medium-sized business, right, from
Mhm.
$1 million to, let's say, $10 million. So yeah, I would say that's the biggest difference that I see.
And how long does it typically take to do a deal?
Yeah, so I would say I'm always looking for ways how to do it as quickly as possible, because
Mhm.
but it depends. It depends on the how the business owner is open and how the business is ready, which is something that I know you are helping business owners to prepare their business so they are much more valuable. And then if they are really valuable, it will be much easier to find a great deal in terms of great terms, and not that much money in terms of like seller financing and things like that. So what I typically find the deals in the small and medium-sized businesses is businesses that are not ready. And then sometimes it's hard to get really quickly, really close to the same expectations, I guess, for the business, how much a business is worth, and what's the realistic like value that those business owners can get. And it's a huge gap all over the world, I believe. So for myself, when we got the opportunity to buy some business, we are usually we basically guarantee that we will give an offer in less than 14 days if we get all the informations. So that's how we are looking to do stuff, and it's different on the scale and the type of buyer. So for me, I'm focusing on owner managed businesses. So it's more like one-on-one type of thing,
Mhm.
right? So I have phone call with the business owner, discussing what they want to do, how they build the business, what's the most important in the transition for them. If you go to the higher deals, especially those like really high one that you are just two lawyers or board of lawyers talking to each other, right? If you are working with the deals that are, for example, on public market and things like that. So my approach is making it as smooth as possible, so as less people as possible are involved. So it's more like one-on-one, and trying to find the ways how to do these type of deals. So for me, I believe I can like give offer for any business in any condition, but because sometimes people need to sell those businesses really quickly because something happens and they didn't prepare the business in the first place. So it depends. I know this is like a not a great answer, but if I am looking to sell business that I buy, I'm making it as prepared as possible, so the transaction is much quicker. So it depends on how the business is prepared, and what will be the final buyer. If you want to sell to transition to buy in the same industry, it will be again different that if you will be looking for bigger private equity companies. So so it depends, but my approach is to find ways as quick as possible and work to close the deals and not talking about them for a long time if it's not necessary, right?
Yeah. No, I mean, I think the answer is it really it depends, right? There's a varied a varied gamut of reasons for why a deal could go quickly, or it could take a long time, maybe a year to execute. And so, like, how do you position yourself when you acquire investors? For instance, a bigger private equity institution or a bigger company that may be looking to acquire a company to achieve some kind of growth target. I think part of it is probably you're more nimble, but is that the one trump card that you have over like bigger private equity firms?
Yeah, I believe that, because like these small and medium-sized businesses that are owned by owner managers, like it's their babies, right? It's not like big corporation bought a business 5 years ago and then trying to sell it because it's either goes well and they want to sell it for premium, or not well and they just want to get rid of it, right? So it's more like I don't believe like having a big deal team around me with the lawyers and accountants and going to the business and trying to make it as big as possible. So I'm trying to be as small as possible. Definitely, if we need to have investors or financing, we need to have lawyers and accountants and financiers involved. But at the early stage, it's more about like dealing one-on-one and making the decisions quickly, which if you are looking for bigger private equity companies, they usually go to your business and do really big due diligence before they give you any offer. And it could be sometimes it could be even disruptive to the business in not the great way, but the bad way, because you need to focus so much on making the transaction that sometimes the business owners are not doing anything else, which should be the ideal. I believe the business owner should move from being a business operator, running business day by day, and being owners that will discuss only exits and mergers and acquisitions and doing partnerships kind of deals. I believe it's a next step on the entrepreneurial ladder, but that's not true for many businesses, right? So yeah, I would say that that's the biggest thing, that we can move really quickly, and it's not that I need to get approval from a lot of other people and from the board or something like that. And it again depends on the kind of deal. If the business is really great and it's really ready for sale and there's a lot of value in it, then we need to have financiers and maybe other investors to bring in, and it can start to be a little bit more complicated. But to be honest, like, that's a great thing that you do what you do, because there's not that many companies like that, unfortunately.
Right.
which make this transaction a little bit harder because people think that they have the diamonds and usually then they don't.
Right. Right. So typically, I mean, there's a two-part, two-part to this. So just kind of pivoting off of what you just mentioned. One is that one is where do you typically see the biggest gap in terms of the worth of the business, where you see it one way in the business, obviously it being their baby, they probably have an inflated sense of what the business is worth, or maybe they looked at whatever their buddies sold their business for and they think they should get the same if not more. And also, like, you mentioned something about a lot of times they come to the table unprepared
Mhm.
in terms of their business. And so how long would you suggest on average, like the ones that come to you, how do you compare and contrast the ones that come to the table prepared versus the ones that are not?
Yeah, sure. Okay, great question. So, so first thing, in terms of being prepared, like, or sorry, the first question was about the differences. So it's
Yeah.
expectations for sure. It's interesting because it's not like it's it's obvious, but if I speak with somebody who already sold the business or have done it a couple of times, they know what will happen, right? So
Mhm.
usually, if I speak with somebody who sold a couple of businesses, I had the discussion last week, and they have a great business prepared for sale. They had great margins, great management team, so owners were not involved. Everything was was working smoothly. So it was hard to talk about that the business is not worth that much, or we need to have a lot of terms, and the business was worth a lot. But a lot of business owners, and it's connected to the second questions, like what I see, it's two type of business owners that I speak with on the phone calls. So first of those people are the people that they are not thinking about selling their business. They maybe contacted us because they want to grow their business, or they can have some challenges with cash flow or something like that. And I'm discussing with them similar thing that you are discussing with the business owners, is like, make the business prepare for sale, even if you don't want to sell it. And most of those people will tell me stories about, I don't want to sell it, like I want to keep it forever, etc. And the second people that I speak with is they call me in a maybe even like a panic mode, that they won't need to sell the business, like yesterday was too late, right? Because they are ill, or they need to step down, or somebody in the family needs to be taken care of, and they need to sell the business immediately. And these people are not prepared because they have never thought about it, and they were probably the first person just a couple months or years ago trying to convince somebody else that they will never want to sell the business, right? And that's the challenge, that people don't have this the end goal in mind. So my suggestion would be to start thinking about it as soon as possible. So yesterday was like 10 years ago, or where you started the business, was the best time to start thinking about it. And next best time is right now. So think about what's your exit strategy. If you want to sell it, for how much, and think about it from this end goal in mind. And then if you go and looking to sell the business, do a little bit of research, because sometimes, like, the expectations is the biggest challenge. Like, we can find a deal how to sometimes give whatever like a business owner's needs, if the business has a cash flow or profits and things like that, because we can structure deals that way. But if somebody approached me with $100,000 EBIT profit company, looking for 1.2 million, which happened to me like last week, like, you are not able to do any deal, right? Because the business is not valued that much. And if I would want to give it to them, I would need to pay it over 20 years, right? Because there's not a lot of profits or value. So it's very hard then to do anything. And it's like painful for both parties, because you feel like they feel, sometimes business owners, I see that they feel like if they get the offer for the business, they feel like it's owner for their, basically their self-worth, basically, right? Because they spend like 30 years building the business, and they feel like if somebody is, I will be back, for some reason the camera is turning off and on sometimes, sorry. So they feel like yeah, we are giving them bad offer. But yeah, you are selling the business, not yourself, right? And I believe if the business owners think about that their business is their product, not the product of the business, it will be a huge difference, right? So that's how business owners should think about. And then you can start to thinking about, okay, if my business is my product, what's my ID client for the business, right? Could it be competitor? Could it be somebody who is having the same client base but different products, and they can cross sell and create more value and things like that. So yeah, start to think about it as soon as possible. And if you are in the process that you need to sell, do a little bit of research and think about what's realistic. So just for the research, like I discussed it yesterday with some of my colleagues, like website that is selling a lot of businesses through brokers, bizbuysell.com. You can, they have a reports that you can look at the average, like a transaction amounts of multiples. So, and you can see for your location and for your sector, what's the like a multiple of the profits that you have. So at least look at that. And if you can increase it by 50% and say like, we have this unique or that unique, so we are more valuable than the average. But if you come to me and say like, we are 10 times more valuable than everybody else, still I, as an owner, working in the business full time, so you need to invest money to buy a job to then go work full time, and I'm running the sales and don't have any processes and don't have any management team. That business is probably not even that valuable, because it's not a business, it's a job. So there's a lot of things that goes through that, and if those business owners don't need to like do it really quickly, we can do type of deals that we get some part of it for the valuation right now, help them to get to the higher valuation, and they then buy the rest after the like some things to get the valuation higher are done. So these things can happen, but then it's about the expectations and understanding, okay, I'm not where I need to be to get that money that I need, and there needs to be a work done. But on average, I would say like 2 years before selling the business is a great time to think about it, because ideally you would like to show the buyer like 2 years of full accounts after these changes when you hire the management team. So maybe even sooner than 2 years, so 3 years, so you can show these numbers and say like, hey, ideally as an owner, you will be sitting on the beach doing nothing, and the business would work by itself, and it will be really the business and not the job. That would be the ideal scenario. Let's think that we like usually working the most is that the business owner is still involved, and we don't necessarily need to discount these deals because they are working in the business, but we need to find a way how to make a smooth transition, right? Because that could be like a big disruption to the business. So, but then you need, as an owner, you need to stay for a longer period of time for the transition, maybe even for a year. Some other companies could link the earnout to it, so you will not get cash the day one, which is kind of hard to get for these smaller deals. A lot of cash up front, because not a lot of these businesses have like value in it on the day one, right? Most of it is theoretical profits that the business will generate in the future. So yeah, think about it in advance. Think about it from the beginning, if I should summarize it. And yeah, and work with somebody who has done that or knows how to optimize these things. Like it could be the best investment that you will make for your business, because yeah, I believe that business owners are not will not get wealthy by running businesses. They need to at the end they need to exit, and that should be the biggest chunk. But if you work 30 years thinking you will not sell the business, and then you will wake up one day and realize you need to because something happened, yeah, that's not a great place to be after 30 years of working, right?
Yeah.
So yeah.
So I mean, if I may put my own kind of encapsulation of what you just said, and obviously you shed a lot of wisdom there, and that's great. Which is for business owners, a lot of times they have the identity tied into the business. So when there is a gap between whether an acquirer thinks their business is worth and what they think it's worth, they take it personally because they feel like the amount of time they've put in, whether it's 30 years or 20 years, it's not being valued. But it's not about them, it's about the business, and therefore they need to decouple their personal ego from the business, the business valuation itself.
Mhm.
The other thing you mentioned was hey, you need to think of the business, and it's a mindset shift that a lot of times business owners sometimes miss, which is that the business is your product, not the products that you sell. So there's two different customers. One is the products and or services that you sell to consumers, and then there's customers, which is the acquirer or the M&A people, or the private equity or strategic acquirer who is looking to buy your business. And so that is where you look at your business as the product. So ideally, you probably have like salespeople or marketing people handle the consumers of your product, the things that you make or produce. But then you should be focused on the business entity as a whole, as a product that you would pitch or market or sell eventually to an acquirer, right? Is that correct?
Yeah,
And so,
exactly. 1000%. Like, but like the first thing that you mentioned, like the valuation of it, like it's crazy. Like if you look at the average multiples on these websites, for example, you will see that the average, like a small companies are valued to like 2 to 4 times profit. So you are working 30 years to build a business that will be making like $100,000 a year, and you will sell it for $200,000. It's not great, but that's how the market is. So, and that puts even more pressure of thinking about it. So in the past, where not every baby boomers start to selling their business, which is the situation that we have right now. So it's buyer's market for sure. You can probably sell the business for higher multiples. That's why in my country, the multiples I generally higher, because there's not that many businesses for sale. And we are a little bit late in terms of demographics. So we will be in the same place after 10 years or so. So yeah, that puts even more pressure. So I understand when I give business owners the calculation, like based on the really, like the how much the business is worth by ongoing concern, it's it's not great. Like I understand that, but that's also opportunity. So we didn't discuss that, but what sometimes I like to do is helping other businesses to buy other businesses, because you can, if especially if you have bigger company, you can start buying smaller companies that maybe you have bigger company that is valued 5 times, and you can start buying companies for 2 times, 3 times, or doing some type of different deals that maybe you don't even need your own cash to do to acquire more customers, product, services, to make the business better, bigger, better, cross-sell, and do these type of strategic things. And then you can sell the whole group for much higher price. So even if you are not M&A professional or don't want to do the M&A, I believe you should build your business to the point that you can start not working in your business. And I would say you have like a lot of discussions about what's working in the business and on the business. And we are talking about M&A transaction and things like that. I believe working on the business is if you are talking about exits, mergers, acquisitions, strategic partnerships, and joint ventures. If you do anything else, you are working in the business because you are solving customer problems or client or employee problems. So if you are dealing with the customers and employees, you are working in the business, no matter whether you are doing systems or preparing things like things that will help you manage your business. So you should, if you want to sell the business, you should move to the another level and start thinking about how to do these type of deals that will enhance the value of your business, and it will help you to go outside of the business and think about it as a product, as you mentioned. So yeah, 1,000, even more, like 100,000%. That's right. Yeah, and it's not great. Like I understand. Like if I would work 30 years for getting the business to maybe $1 million, and like if you look at the statistic, it's terrible. Like, right, if you have like $1 million business in the US plus, like you are, I believe, like 1% of the business or 5% of all the businesses. It's like crazy, right? With the average profit margin, you can have like $100,000 profit. So with the average multiple, your business is valued like 200 to maybe 500 if it's great business. Probably not. So 200 to 400, and it's your whole 30 years of work value that you created. It's not great. Like I understand, I would be angry as well, but this is the market. So you need to think about how to, on one side, increase the profits and the size of the business, because bigger is more beautiful and more valuable. Just because you are beating the odds of those statistics. Like if you have business over $10 million, I have it on my website. It's like you are 1.4% of 1,000 businesses, like something crazy, like, right? So if you want to be bigger, you want to be more profitable, you want to have a great cash flowing business. So, and that's another issue we can talk about for a long time. And then you need to think about the intangible stuff, like, do I work in the business, or do I work outside of the business, working on the exits, and really starting to look how to make my product more valuable, the business itself, and other things like that. So these two things you need to play with. And ideally you would want to practice over your like a career by building businesses and selling a couple of them throughout the process, right, throughout your career. So you can have a practice and not put all your baskets or your eggs into one basket, that you will build one great company and you will sell it one time, because usually you will probably do something. Nobody has done the great job at the first time, right?
Right.
First time is always the learning. So if you have one product, your business that you need to sell, work with somebody that can help you, either investor that will help you to make the business more valuable, because they will be looking to make it valuable so they can sell it, or with somebody like you that can help you with consult with them and work with them throughout the process to make it more valuable. And we are using the similar processes to make our businesses more valuable, right? So I highly recommend that.
Yeah, and I think you brought up a couple of things that I wanted to kind of highlight. One is the valuation side of it, which is that you may have $1 million annual sales, but if your profit is like 100,000, and the valuation or the purchase price comes to, let's just say, 3 times your net profit, you're going to end up with like 300,000 valuation, and you may scoff at it, be like, you're going to give me 300,000 for a business that generates $100 million in revenue. And that depends, right? Because not every business is going to, you may be thinking that you should be getting 3 times your revenue, but the market may be, looking at 3 times your profit. So that may be one of the disconnects, which is why you need to look at sites like bizbuysell.com, like you mentioned earlier, to just kind of see what the market and the market valuation is, so that you have a more realistic assessment of where you are with your business.
And don't look at the public companies, please.
Yeah, exactly. Yeah.
I see like people looking at the public companies, and they say like, hey, this company is valued like 30 times, so I'm valued 15 times.
Yeah.
So, that doesn't work. Like, just to finish this thought, like if you look at the same size businesses that are public and they are not public, like private and public, the public will be usually 20 to 30% more valuable just because they are liquid, right? Liquidity is a great thing. So don't look at the public companies. It's completely different game. Like if you want to buy a couple of businesses or build your business by other acquisitions and then take it public, like, yeah, great. That's things that I love to do. And it can be a great way how to get a lot of money from yourself personally out of the business. And if you have business with over $1 million, you can take your business public, but by some options, and then you can use public stocks to buy other businesses and things like that. We can discuss that in more details, but like you can do this type of stuff to use it to create wealth for yourself, but please don't look at it in terms of valuation. And sometimes it's happened to me, like people give me something like that, and then it's kind of even hard. Like I'm trying to find ways for everybody and trying to give value to everybody that I speak with, at least some advice. And it's kind of hard to tell them like, I'm sorry, like it's not like that. Like it's different, right? Like don't be disappointed by just having the expectation so high that then it will be so low that even the great, then that could be an issue, because you can then get the great deal in terms of market and the value, and you will not take it, right? Because you will feel like it's not that, it should be much more. But if it's not realistic, like you will be disappointed. So before you mentally spend the money that you feel you will get for your business, like do this research and talk with somebody. I wouldn't spend a lot of money getting those like official appraisers, because that's not great. Like the business is valued based on how much somebody will be able to give you. So the appraising value is not great. It's not real estate that you will look at then similar real estate in your area, right? And you can assess how much value it is. Business is completely different game with thousands of moving pieces. So I wouldn't, that happened to me sometimes as well. Like we had our business appraised, so we will send it to you. And sometimes it's good, but sometimes it's not. Usually it's not. And I say like, did you get the offer for the same amount of money? Because if yes, then I will probably be out of the game. But if he didn't get any value, it's just like a theory. It's like profits that doesn't exist, right? It's just a theory. So these things I would be careful about. You can have it for like a idea, but yeah, the first thing how you can turn off the potential buyers, give them something that is completely out of reality and this world. Like
it's what your house or your property or your asset is what whatever the market will pay for it now. What some appraiser is, I mean, the appraisal helps in terms of maybe you having an idea, but it doesn't, you shouldn't expect that you're going to get the exact same number that in the market that the appraiser has on the appraisal report. One of the go ahead.
No, that wasn't that important. Go ahead.
I was just going to say that that's why we offer, if people go to www.infhorizons.com, we provide free valuation, and I encourage business owners to take advantage of that, because you get like a 30-page report that tells you the 8 key drivers of value in your business. And you get an ancillary report, and you get to you get even some suggestions and some red flags, so you're better prepared when the time comes, whenever you decide to transition, whether to your kids or whether you want to sell. So that is a very important first step. So people can go to infhorizons.com /podcast and get more content there. And also there's a button to get free valuation. I would definitely encourage business owners to take advantage of that. Now, one of the things that you also mentioned, which I thought was important, is this this idea of what percentage, this idea of working on, if they are doing anything other than looking at the external view, that is talking to M&A, mergers and acquisition people, private equity people, to see what they look for in their company, just to kind of help them in their good decision making. If they're not doing that, if they're doing things like whether it's building systems or managing employees or whatnot, that's working in the business. What would be, I mean, ideally, there's two ends of the spectrum, right? There's 100% just completely not involved in day to day, right? That's almost like you semi-retire. You basically kind of almost like going into the non-executive boardroom as a chairman,
or something.
right? Right. And
That's
then you being the owner operator, what Michael Gerber calls the author Michael Gerber calls the technician, where you basically kind of are running and operating everything. So what do you have any kind of suggestion along the spectrum, depending on where they are in your journey, what they should strive for in terms of the percentage breakdown or how much time they spend. And then the second thing to follow up on that is, I'll just say, kind of finish that. But I'll say the second one will be, a lot of times you talked about, ideally they would have, built and sold a couple of businesses to get experience. But for a lot of business owners, that business is going to be the only thing that they ever do. Is kind of like Captain's Sully, who landed the plane on the New York River. He had been practicing, hand glide, gliding, helicopter gliding for a long time until that bird strike, forced him to land the plane on the river. And he was the one person that was in the right position to do it, because otherwise any other pilot who had in practice gliding would have, completely crashed the plane and, broken the plane into multiple pieces and killed a lot of people. So on the one hand, a lot of business owners won't have the opportunity to have gone through a lot of different exits to get the hang of it. But on the other hand, what would you have? And I guess the best thing for them to do would be, like you said, to work with either an investor or like an advisor like myself to kind of help them, through the process, to think through what they need to do to get ready for that. So just wanted to kind of touch on those two things: the percentage breakdown between working in the business and out of the business during the course of, as they approach the exit, how they should be gauging, or they should be creating the goals. And then the other thing would be just, a little bit more color on, for business owners who don't have the opportunity to be exiting and creating new businesses, just how they can best protect themselves so that they don't get a short end of the deal when the time comes.
Yeah. Cool. So the first answer to the question about the percentages, it will depends whether you are looking like you can go 100%, right, and just be on the beach and playing with your kids or grandkids and just be happy chairman, I guess. And just talking with the potential buyers and trying to find a deal that will be great, and having like realistic valuation by getting these offers, right?
Mm-hmm.
And just saying no to them if you don't want to sell it. But if you are looking to go to the next level, and it's tied to the second question as well, like if you want to go to the another level, I would start to thinking about how to grow your business and the value of your business by doing these type of deals. So both on other companies to yours, doing joint ventures, doing partnerships. So if you are looking to add this, like a mergers and acquisition strategy, how to grow your business, it will be much more time, right? Because if you will be like just looking for the sellers, for the buyers for your business, you still can probably spend 80-90% of your time working in the business, doing what you love. Just if you are looking to sell, think about how to make the transition as smooth as possible. So maybe start to think about the second person that can take over your responsibilities if you decide to sell. So then you can, if you approach the buyer, you can say like, hey, I'm still doing this in my business because I just love to do it, and I can still do it for a couple of months or something like that in the transition, or just oversees the business in this terms and as an advisor or advisory board or whatever. But there's the second person that knows everything, and he's able to step up the last minute notice and take over these responsibilities because he's able to do that. So if you don't still want to work with the business, because sometimes a lot of like not a lot of, but sometimes I got the deal on the table that business owner want to stay working in some part of the business. We had the car repair shop and he want to just work on the cars, but don't think about growing the business, sales, marketing, right? So he was looking to, hey, let's buy my business. You can take over this one and I will be the person that will take care of the car. So your customers will be super happy. But I just don't want to deal with the other things that cars, for example. So things like that can happen. I had discussion with company, with the advisor of the company that they were like architect, and they wanted the owner also wanted to just do architecture and don't do anything else, and looking to sell to somebody who will be able to take over the sales and marketing and managing employees. So if you are looking to stay, like find somebody who can take over if you need to go before because something happened, or at least create procedures and things like that, so it will be easier to follow and not have all your expertise in your head. Like sometimes like those business owners are the best salesperson, the best engineering person, the best person doing something that is really important for either sales and marketing to grow the business or delivery of the product, and that's not great. So do systems, procedures work on these things like that, so your new COO or whoever can just look at it and see, okay, this is how we should done these type of things, so it's easy to do. So then if you are just looking to test the market and see whether you get a good offer and talking with the buyers, you can still do like 90%, 90 to 10. But I would encourage, think about how to add the mergers and acquisition strategies to grow your business, because like I don't know any other opportunity how to grow your business by year worth of sales in the afternoon. Like if you buy the same business that is the same revenue and you buy it, for example, for the things that you already have in the business, the resources that you have, like you can double the size of the business. And if you look at the valuation of the companies that are $1 million in revenue and 10 million of revenue, there's a huge gap, like just by being much bigger. Then you can do more of looking for deals and partnerships and joint ventures and things like that. That's my favorite way how to grow businesses, is by looking strategically how to add more revenue or get the resources that I don't need. So everybody who's going to have a phone call with me discussing how to get their business on the next level, I would literally think about, not about the marketing ads that I want to create or the salespeople I want to hire, even the salespeople are important. And if you don't have salespeople in your business, hire them because it can change your business. But yeah, things like that. So if you want to add new products to your product line, like is there another company that has the product already and you can buy it, merge with them, or do kind of deal? And it's mindset shift, and it's study and learning curve to do that if you don't not find anybody that can do it with you, right? But that's a favorite thing that I like to do, because if I buy businesses by myself, I have my resources and investors and financiers and things like that. But if I work with another business that is looking to grow by mergers and acquisitions, they have the financing options, they have the cash available, they have other resources that they can finance or leverage to buy smaller companies. And then if you bought on these type of things and do cross-selling and things like that, you can really enhance the value of the business and the size of the business. And I just enjoy these type of deals, right? So I guess it's
Yeah.
it's easy to notice, but I enjoy that. But you can start to thinking strategically. A lot of business owners think about a lot, like tactically a lot, right? And you need to do all, because you are not You cannot just think strategically, don't do anything, right? You will not
Right.
get far, but you need to combine that. And if you are managing the business day to day or working in the business, and I'm working in a couple of businesses that I own, doing things that I like and that I enjoy, and for some parts, for some period of time, I want to roll up the sleeves and do something interesting. So that's cool. But sometimes it happened to me also, like you start working in the business and you are starting losing. I will be back really quickly. Right now. Yeah. So you are starting to lose the perspective of being outside of it. So I believe that's a great transition to think about. And and the second question was about how to protect yourself, like partner with somebody who knows what they are doing, has a system. It could be advisor, it could be investor. Like if you just find somebody who had sold a couple of businesses for a great valuation, like, and give them a couple of equity to help you to get the higher exit value, like it will probably be worth a lot, because like they can enhance the value a lot. And it doesn't need to take a long time if you have great business, but like most business owners are leaving money on the table, even in terms of profitability or cash flow or value. So these three like levels, profits, cash flow, and value, they can be optimized really quickly and create a huge value for the exit. And we have a process for the first 90 days of ownership of any business that we go through, and we optimize the cash flow, we find the profitability, usually are able to grow the profits by 50 or 100% in first 3 months. And if you just grow your profits by 50 or 100% in first 3 months, like your business is valued based on the profits, right? And if you turn the business from cash sucking business to cash generating business, and that's something that most business owners struggle because they are not strong in financial stuff. These things can be done pretty quickly and can enhance the value really fast. And so any investment in that would be worth more than hiring any person for your business, I believe, because that will be marginal comparing to those type of things, right? Like just find 10% of the expenses that you are spending in your business and you don't need. And if your profit margin was 10% and you save 10% of your expenses, like you will double the profits of your business and you will double the value of your business. And like most businesses can save 10%. If you feel it's not possible, it's because you're working in the business and not thinking about, you don't have the perspective, right? You feel like everything is important. So just like quick tip, like if you want to think about like enhancing the profits, like just start to think about maybe sign every expense for the business for the next 3 months. Like you will find ways to save. Like that's literally the exercise that I do. So just a little bit of insight now what we do. Like that's the first thing. And especially it's not published yet, but I recorded a short message for the business owners how to manage and protect the business in this inflationary periods. Is super important right now, because it puts pressure on expenses of those businesses, and if you are not careful, the inflation can creep in. So I was talking about 3 steps how to manage the business in terms of in these times, and managing the profits and managing them monthly, following the trends and things like that. So yeah, if I'm speaking a foreign language too, like find somebody who understand that and can do it with you, right? But these things are not a rocket science, but just a couple of things that you can do really quickly that can really create a huge value. You don't need to hire 10 people and do huge acquisitions or double the size of your business, which could take you like 10 years, right?
Right.
And do small changes that will make a huge difference. But you need to know what changes will produce the difference in the value of your business, right?
Right.
And most business owners don't think about it that way. So they sometimes work or think that doesn't matter in terms of valuation of the business. So I know the report that you mentioned is great in finding those things, and I'm using the same to think about my businesses. So I would definitely do that. And if you optimize just a couple of things, it can be a huge difference. And think about what's your ideal client in terms of ideal buyer, because then you can prepare the business for sale to those ideal clients, right? If
Yep.
you want to sell it to M&A, it will be different. If you will sell it to trade buyer, then you can start to pitching them about all these opportunities that you wasn't able to take advantage of because you don't have the resources. But if they buy it into their group with all the resources and distribution channels and things like that, they can scale the business pretty quickly and they can give you more value for that. But sometimes they are pain in the ass. Sorry. But it's with the private equity as well, right? You need to find the right buyer that will take your business to the next level. And think about what's most important in terms of selling your business, because what I find usually, and there was a research about it, it's usually not price. Like business owners are more interested in protecting the legacy, protect the employees, and things like that. So for example, businesses that we buy, we never change anything like that. We promise we will not change the brand of the business. We want to build upon the legacy and the brand that these business owners built over years, and then we can use these strategies and buy other businesses to that and do things like that to make it even better. And sometimes these people want to have a part of the business still, like keeping 10-20% of the equity, so they can have a second exit when we optimize the business, take it to the next level, thinking those type of things. So you can find business buyers that will be better suited, even if they give you worse deal, they can give you much more in terms of taking care of the things that they are important. This is the challenge with the trade buyer sometimes, because they don't need your people, so sometimes they will fire them or they can change the brand. I never understand that. Like, why would you want to change the brand that it was built for the last 30 years? It's interesting because even like a big public company sometimes do it. They buy two companies and merge them together. All of them have both have 10, 20, 30 years of old brands, and they merge it and create a new branding. Like, I don't understand it. Like, that's something that I feel it's so stupid, but
it's a hostile takeover, and sometimes it's just a question of killing the competition just so that you can be the sole brand in town.
I guess it's a lot about the ego as well, right? Like, have you be the CEO of the company and having this type of brand being the brand that will be known. So so if you are a business owner with a small and medium-sized business that you want to sell, think about what's most important for you in the price. And that's literally the question I ask first. Basically, one of the first questions I'm asking these people that are looking to sell or thinking about selling, what's the most important for you? Like, if it's protecting the brand and employees, I'm probably the good guy, the good person. If it's like a maximum valuation, go to your competitor. They will be able to give you more. But sometimes they will just want to have information about yourself, right? And they will not give you offer. And sometimes
there's that dirty business too, right? A lot of people sometimes will come and get access. They sign an NDA, get access to information, and they were never serious, and they use that information against you down the line.
Yeah, and sometimes it's happened even during the due diligence process, even with the private equity. So it's not about private equity is this and the trade buyers are that. It's not like that. It's everybody is different, right? But yeah, I heard about stories that people spend 6 months on due diligence, and just for those private equity companies to find what's wrong about the business. So they will give you a great headline number first, but then you go to the due diligence, they will take 30 lawyers and accountants to go to your business and finding everything that's wrong, and then tell you we give you $10 million, but we find out it's worth $1 million, right? and at that point you tell everybody else that you are selling for that great money, so everybody spend their money somewhere else, and
Yeah.
you are not in a great place. So these things can happen, and be careful about it. So yeah, sometimes we like to do the deals that involve as least due diligence as possible, so it can happen quickly, and we try to give offer the first offer that is pretty realistic. And sometimes we lose deals that way because somebody else will give them better offer at the first place, but then they will lower it sometimes. So yeah, these things happen. Like every industry, I guess, has their villains. We can talk about business brokers for a long time.
Yeah. And I think this is where having a partner is extremely important, and an advisor is extremely important, and because almost all the time the upfront offer is going to be higher than what the final offer is when they do the letter of intent. The question is how much lower, because once they start doing the colonoscopy of the business, they inevitably are going to find something that is going to lower the value, the initial valuation. The question is to get your value to the point where if you're not going to get more than what the initial thing is, at least not significant, anything that is like 90% lower, like the extreme example that you gave. And that's sometimes, and by that time, a lot of owners feel like they've been put in a bind because they've put a lot of effort and time into the deal, and to come
and they will just say,
out.
okay, let's do it. Yeah, exactly.
That's true.
And that's a good point that I would add. Like, if you decided that you want to sell, like the same, like you are working with selling your product into, your business is product to your customers, you want to create as least friction as possible, right? To make the sale as smooth as possible. So do the same when you are selling the business. Like sometimes it's so hard to get information, like just having the information prepared in the first thing that if we are preparing the business for sale, even ours or somebody else's, like we create a data room that all the information is stored. It could be a Dropbox or whatever, that you have all the informations and you can just give it to prospects so they can really see what's going on really quickly. Then the process could be much quicker. And if it's much quicker, and it's much more pleasurable to work with you, it will help you with the terms and the price as well, because they will know and with how the deal will happen, how fast it will happen. So yeah, just create eliminate as much friction as possible to make it as smooth as possible. Maybe be willing to think about some terms that you can give the buyer if your business has any challenges or something that is not optimized, and then you can do these deals pretty quickly and find the buyer that will take your business to the next level. And you don't need to sell 100%, right? You can sell a little bit less and keep some equity that you can sell for much more later. So yeah, if you are staying flexible and know how the market is and eliminate a lot of friction in terms of selling the business, you're in a good place to do the deal quickly.
Wonderful. All right. Well, we're gonna bring this to a close. How can people, because you had mentioned your website earlier, how can people find out more about what you do, and if they need to get in contact with you or follow your work?
Yeah, sure. So my website is krystofbartos.com, KRYSTOF BARTOS.com. If we can, we can link a couple of resources below the video or whatever. So on the website, we have a couple of free resources. Like we put together a free ebook that we put down 10 best strategies that we use to grow business size, profits, value, so you can sell it anytime you need or want. There are articles and other things, and we are preparing more stuff for this year. So we share a business tip of the week that we discuss all the time about things like that. And if you are looking to sell your business, maybe right now, there's how to schedule a phone call with us, and we can have a discussion. And as I mentioned, If you are looking to sell and give us information, we guarantee that we will give you an offer in less than 14 days. So you can have a offer quickly, and then you can decide whether it's a good offer or not. It's a different type of story, right? But yeah, so if you can link around this video some other resources, we'll be happy to give it. But this website is where everything is put together. It's a little bit mix of the private equity company that we have and consulting group that we have that helps with businesses that we don't buy. So it's like mix of both worlds, but you will find everything there.
Okay, and we're gonna have all that information on, in the show notes. So in case people are driving, they don't have it, the ability to write it down. We're gonna have this in the show notes so people can look up that information later on.
Yeah, let's go.
All right, wonderful. Well, thank you, Krystof, for joining us today.